Since you clicked on this video, I'm going to start off by giving you a free gift. So if you hit the first link in the video description, there's a guide that you can download for free, and it's on technical interview questions. Because if you're trying to break into the industry, you're going to come across technical interviews. So it's got questions and it's got good model answers. Check it out, and with that, let's get straight into the video. What's going on, people? Welcome back to another weekly roundup. 3 stories that caught my eye earlier this week, and they include 1, Morgan Stanley faking the title of an executive in order to dupe the ECB. 2, private schools focusing more on international students in fear of a Labour Party win in the next general election. And 3, Goldman Sachs profits are down, but their CEO pay is up by 24%. So with that, let's get straight into story number 1. All right, story number 1 is Morgan Stanley faking or accused of faking a job title to fool regulators. So a senior employee at Morgan Stanley alleges that they created his job title to deceive European regulators on the back of staff relocation post-Brexit. The employee joined Morgan Stanley's Frankfurt office in April 2021, earning around 375,000 euros. So this guy was an executive director, and he was formally given the title head of loan trading. So that's a big title that carries a lot of, risk management responsibilities. However, he says that he was told not to actively use the title and that it's just been created and it only exists on paper purely to meet regulatory requirements. All right, so why does this matter? Well, since Brexit, European regulators have urged international banks to have local senior staff members managing EU business. So the banker got fired by Morgan Stanley and is bringing all this to light to the court in order to say he's been dismissed unfairly. And so back to the story, the Frankfurt court rejected Morgan Stanley's case that the banker was a senior risk taker, thus upholding his appeal against the dismissal. Morgan Stanley disputes the banker's claims and argues that he even used his title on LinkedIn. Yet his job involved origination and the sale of distressed debt rather than managing the significant risk and responsibility that come with the oversight of trading desks. This all matters because changes to German employment law post-Brexit affects the job security of material risk takers. And so the court ruled that the banker's formal position wasn't sufficient to qualify as a material risk taker. To no surprise, Morgan Stanley is appealing the verdict. If you hit the first link in the video description below, there's a free guide for you to download, and it's basically a guide that helps you with your technical question responses, because when you're trying to break into the industry, you're going to be faced with these types of technical questions, and so a bit of practice can go a long way. Hit the first link in the video description and download it for free. All right, so story number 2 is around UK private schools focusing on international students. So let's get into it. Private schools are fearing a potential Labour Party win at the next general election. As such, they're strategizing ways to attract more overseas applications in anticipation of the Labour Party's imposed VAT on their fees. I had no idea private schools didn't pay taxes. Did some research, turns out they operate as charities, or most of them do anyway. Some of the measures being explored by these private schools include cutting back on scholarships, which means, kids that can't afford private school tuition typically get scholarships, so they're going to miss out on this. Cutting back on bursaries, allowing parents to pay for fees up front, so parents can pay for fees on a termly basis, but now they're considering allowing parents to pay for their kids' fees a few years in advance. And also intensifying the recruitment efforts abroad, so going harder abroad with their marketing and all their relationship building campaigns. Part of the reason why Labour's pledged to impose VAT on private school fees driving international focus is because international students and families are considered to be a little less price sensitive. The private school sector in England has increasingly relied on international students given there are less borders, so less kids in the UK boarding. Schools are now diversifying their recruitment efforts to a broader list of countries, partly due to fluctuations in key markets like China and Russia. Some schools are going as far as acquiring institutions in Europe to mitigate VAT issues, as VAT isn't charged on private schools in the EU. Labour's proposed VAT exemption removal could raise education costs by 20%. This would then prompt schools to consider adjustments to their fees and their expenditure. As such, schools are proactively increasing international recruitment efforts to counter potential VAT-related charges. However, although educational consultants and recruiters are seeing increased efforts by British private schools to attract overseas students, some experts doubt the long-term sustainability and reliance on overseas enrollments. All right, final story for today. Goldman Sachs CEO David Solomon received a pay package of around $31 million last year, up 24% from the previous year. However, this was despite the fact that Goldman's reported its lowest profits in the last 4 years. David Solomon faced challenges in 2023, including criticism of his leadership style and job cuts at the bank. But he was rewarded by the board of Goldman's for his refocusing strategy on investment banking and trading. The pay package of $31 million that he received consists of $2 million in base salary and then a $29 million bonus, primarily consisting of Goldman's stock. This marks his second most lucrative year as CEO of Goldman Sachs. The first was in 2021 when he received $35 million. While Solomon's pay increased, overall expenses on remuneration, so pay salaries, only increased by about 2% at Goldman's in 2023, despite a reduction of 3,200 employees. CEOs at rival banks like Morgan Stanley and JP Morgan also saw their pay packages increase in 2023. Jamie Dimon, CEO of JP Morgan, received $36 million and James Goldman of Morgan Stanley received $37 million. However, Bank of America CEO Brian Moynihan saw his pay cut by about 3% down to $29 million. Goldman reported lower profits in 2023 due to strategic decisions such as scaling back its consumer business. However, they say that their compensation committee believes that these actions were necessary in order to achieve long-term success. The bank's net income fell by 24% to $8.5 billion, the lowest since 2019, and its return on equity was below target at 7.5%. Despite these challenges, Goldman is optimistic about its future prospects with a stronger platform for growth in 2024 and beyond.